Welcome to Aither Insights. We're your go-to source for, well, the sharpest market analysis on critical regulations and topics affecting environmental commodities. I'm really looking forward to getting into today's subject.
Me too. And today we're focusing on something that's really shifted from being a kind of future idea
Yeah.
to a rapidly growing reality right now. That's the surge in carbon removals.
Exactly.
For any organization thinking about climate strategy here in late 2025, getting your head around this isn't just like important, it's pretty foundational if you want to hit those net zero targets.
Absolutely foundational. Yeah, we're going to explore this growing demand for projects that are actively designed to pull carbon dioxide out of the atmosphere.
Right.
Looking at both nature's own systems and, the more cutting-edge tech solutions. Our aim today is really to pull out the key insights from what we're seeing, help you sort of cut through the noise a bit.
Yeah, get to the strategic core. We'll try to unpack what's really driving this increase, look at the different approaches, and there is debate there, and also be realistic about the big challenges that, well, still need figuring out. Ultimately, we want to show why getting involved strategically isn't really optional anymore. It's becoming a market imperative for businesses like yours.
Okay, so let's start with the basics, just to frame it, even though many listeners will know this. What exactly is carbon removal, or CDR?
Right, so it's about human activities deliberately taking CO2 out of the atmosphere, not just stopping it going up, and then storing it durably.
Durably being the key word there.
Exactly. Whether that's deep underground, in the land, oceans, or even, locking it into products. It's kind of how we actually achieve the net zero, tackling the legacy carbon that's already up there.
And it's important, isn't it, to distinguish this from, say, traditional carbon capture?
Oh, absolutely critical. Yeah. Traditional CCS, carbon capture and storage, usually grabs CO2 at the source, like a power plant chimney, before it gets into the atmosphere. Carbon removal, CDR, is actively reducing the CO2 that's already floating around.
So one stops the bleeding, the other cleans the wound, sort of.
That's a good way to put it, yeah. Both vital, definitely, but they do different jobs.
And the science, especially from the IPCC, seems really clear on its role now.
Very clear. Look, deep, sustained cuts in emissions are job number one. We absolutely have to keep stressing that.
Can't say that enough.
But the consensus is those cuts alone, they just won't be enough to limit warming to 1.5 or even 2 degrees Celsius. Carbon removal is essential. It's not a substitute for cutting emissions, but it's a necessary part of the toolkit.
And why is that? Is it mainly those tricky sectors?
Precisely. It comes down to those hard-to-abate emissions. Think aviation, agriculture, some heavy industrial processes like cement. Getting those to absolute zero is incredibly difficult, maybe impossible in some cases.
Okay.
So carbon removal acts as a counterbalance for those residual emissions. Without it, hitting genuine net zero. It's pretty much unattainable based on current tech and economics.
And this isn't a down-the-road problem either, is it? The scale needed is urgent.
It's immediate, yeah. The numbers are quite stark. Current estimates suggest we remove maybe 2 gigatons of CO2 globally each year, mostly through, simpler things like reforestation.
Great.
But compare that to our annual emissions. It's tiny, like maybe 4% of human-caused greenhouse gases annually. It's a start, but nowhere near enough.
So what is enough? What are the projections saying?
Well, to get on track for net zero, the scale needs to ramp up dramatically. We're talking 1 to 1.5 gigatons of removal per year needed by 2030, 2035. That's, roughly 25 times today's levels?
Oh, 25 times.
And it doesn't stop there. By 2050, projections point towards needing maybe 4 gigatons a year. That's 100 times current levels. It's a monumental task. But if the barriers are tackled, the market for just the CDR credits could hit something like $100 billion a year between 2030 and 2035.
That's huge potential. Okay, so how do we even begin to achieve that kind of scale? You mentioned two broad paths.
Yeah, broadly speaking, you've got nature-based solutions on one hand and engineered solutions on the other. Very different approaches, but both likely needed.
Let's start with nature. What falls under that umbrella?
So nature-based removal, or NBR, is about using Earth's natural systems. Planting new forests, that's afforestation, reestablishing old ones, reforestation, agroforestry, where you integrate trees into farming, and restoring wetlands, which are amazing carbon sinks.
And these often come with extra benefits too, right? Beyond just the carbon.
Absolutely, that's a big plus. You get biodiversity enhancement, healthier soils, sometimes flood protection. Think about blue carbon projects restoring mangroves or seagrass beds. They store carbon, yes, but they're also vital coastal ecosystems.
Sounds great. But what are the catches with nature-based?
The main challenge is often permanence. How sure are we that the carbon stays stored? Natural events, huge wildfires, disease outbreaks can release it all back into the atmosphere pretty quickly.
Right.
And land use changes are a big factor too. If policies change or economic pressures mount, forests can still be cut down. Plus, there's growing competition for land itself. You need space for food, for nature, for removals. It gets complex.
Okay, so permanence and land use are key issues there. What about the other side, the engineered solutions?
Right, the technology-based removals, or TBR. This is where you see things like direct air capture DAC. These are basically machines that pull CO2 directly out of the ambient air using chemical or physical processes.
Like big CO2 filters for the sky?
Kind of, yeah. Then you have things like BECCS bioenergy with carbon capture and storage. That involves burning biomass for energy, but capturing the CO2 produced. Biochar is another interesting one.
What's that?
It's like a very stable charcoal made from heating biomass without oxygen. You add it to soil, it locks up carbon for a long time, and it can actually improve soil fertility too. And there are others like enhanced weathering, which speeds up natural rock weathering to lock CO2 into minerals.
So the big advantage here is likely the permanence.
Generally, yes. When you store CO2 deep underground geologically or lock it into stable minerals, it's likely to stay there for thousands of years. Much more predictable permanence than, say, a forest.
But the downside? I'm guessing cost and energy.
You got it. They tend to be very expensive right now, both to build and to run. And some, like DA, can be quite energy intensive. That's the trade-off you're making. Higher permanence, but higher cost and energy demand, at least with current technology.
Now, you mentioned earlier there's some debate, particularly around ocean methods.
Ah, yes. This is a really interesting and quite sensitive area right now. Recent studies are raising some, let's say, critical questions about the climate mitigation effectiveness of certain ocean-based approaches.
Like what kind of approaches?
Things like cultivating shellfish or seaweed on a massive scale, restoring coastal blue carbon habitats like marshes, or even ideas around boosting whale populations to store carbon.
Okay. So what are the studies saying?
Well, the research, including work from places like UEA and Tasmania, suggests that while these activities often have significant other benefits for biodiversity, local economies, coastal protection, which is great,
Right, important stuff.
they might not actually remove and durably store large amounts of additional atmospheric CO2. Some researchers are even cautioning they could be dead ends if the primary goal is substantial climate mitigation.
Mm. So there's a risk of overstating the climate benefit, potential greenwashing.
That's exactly the concern being raised. The call from these researchers is really for R&D funding to focus squarely on methods that are demonstrably safe, durable, verifiable, and crucially scalable in terms of actual CO2 removal. It's about being really rigorous about what counts.
That's a really important nuance. Okay, so bearing all that complexity in mind, let's look at the market today. Where is the money flowing?
Well, globally, something over $30 billion has been invested in carbon removal projects so far. Interestingly, private investment seems split pretty evenly between nature-based and engineered. Public money, though, tends to lean much more heavily towards the engineered tech side.
$30 billion sounds like a decent chunk, but how does that stack up against the need you mentioned earlier?
Yeah, it sounds substantial, but honestly, it's just a fraction. Experts are talking hundreds of billions, maybe even trillions, needed by 2030 to get us on track for 2050. So a huge gap still exists.
But there are positive signs in the market signals.
Definitely. We're seeing a clear pivot. If you look at the voluntary carbon market credits, issuances for CDR credits have been growing strongly, like 23% annually since 2020. Meanwhile, credits for traditional avoidance or reduction projects have actually declined slightly, around 7%. The market is shifting focus towards removal.
But growth doesn't mean it's easy. What are the main roadblocks right now?
A key one is demand uncertainty from companies. There's still quite a bit of ambiguity, about exactly how carbon removal credits can be used in corporate net zero plans, how they fit into disclosure frameworks. That makes buyers hesitant to make large long-term commitments.
And the cost, especially for the engineered stuff you mentioned?
Huge barrier. Yeah, just look at the numbers from last year. Engineered removals were only about 10% of the credit volume, but they represented something like 65% of the total revenue spent.
Wow, so much higher price point.
Much higher. And because of that, the demand base for those high permanence, high cost engineered credits is still pretty narrow. You've got a small number of mostly tech companies driving the bulk of the purchases. One top buyer reportedly accounted for over half the market alone. For sectors with really hard to abate emissions, like aviation or cement, The cost of buying removals for even just 10% of their emissions could be significant. It could eat up, say, 10% of airline profits, or potentially even half for cement companies if they go for the most expensive engineered credits.
Whereas for low-emission sectors,
For them, like tech or finance, the impact might be minimal, maybe less than 1% of industry profits. So you see this real disparity in affordability, which shapes who can buy what and how much.
Okay, let's zoom in on the UK specifically. What's the picture there?
Well, the UK definitely has strong potential. Great R&D base, good geological storage options offshore, particularly North Sea, and a sophisticated financial sector. The government has set targets too, aiming for 5 megatons per year of engineered removal by 2030. If that happens, it could create a domestic market worth over, say, $500 million.
But it's not operating in a vacuum, is it? There's international competition.
Fierce competition, yeah. You've got the EU pushing hard on standards and definitions, and then the US with things like the Inflation Reduction Act offering really significant subsidies that are pulling investment over there.
So investors in the UK are looking for more clarity.
That's the clear message, yes. More clarity on the long-term strategy, more robust support mechanisms are needed to really unlock the private capital required to meet those ambitions.
And policy is evolving globally, too, kind of blurring the lines between voluntary action and compliance.
It is. We're seeing moves towards potentially including carbon removal in compliance markets, like emissions trading systems. If removals become eligible under something like a future UK ETS, for example, that could provide a really crucial, stable commercial incentive for projects. That's something the market is watching very closely.
Okay, so bringing this all together, what's the key message for organizations listening, thinking about their net zero goals?
I think the clearest message is don't wait. Delaying action on carbon removal really does come at a cost now. The supply of high-quality projects, especially those with strong permanence and co-benefits, is still limited.
And prices are likely going up.
Prices are rising. Competition for the best projects is intensifying. The smartest companies we see are starting now, maybe small, but they're learning, building relationships, and planning how to scale their engagement over time.
And you don't need to be a massive corporation to start.
Absolutely not. Even relatively small purchases matter. They send a vital demand signal to developers, helping the whole industry scale up. The key is just to get started, because waiting likely means fewer choices and paying more later on.
So how should companies approach buying? What are the options?
We tend to think about it in terms of a buying stack. 3 main approaches. First, you've got spot purchases, buying credits for immediate use, immediate retirement.
Good for dipping your toe in.
Exactly. Great for initial experiments or meeting immediate needs. But they're usually more expensive and supply can be uncertain year to year.
Okay, what's next?
Second, forward purchases. These are basically pre-purchase agreements. You agree to buy credits that will be generated by a project in the future, often at a fixed price agreed today.
So more price certainty, maybe lower costs.
Often, yes. Gives you more predictability than spot. You can access innovative earlier stage projects this way too. The trade-off is some delivery risk. Will the project deliver exactly as planned on time?
Makes sense. And the third type?
Offtake agreements. These are longer-term, multi-year commitments to buy a certain volume of future credits. They provide real price and volume security for the buyer.
And crucial for the project developers too, I imagine. Helps them get financing.
Absolutely vital. These agreements are often what underpin the financing for new, capital-intensive projects. And while people often think of offtakes as only for the huge players, we're seeing smaller, more flexible offtakes becoming really impactful now, allowing even mid-sized companies to secure future supply.
So spot, forward, offtake. Is the best strategy just to pick one?
No, definitely not. The most effective strategies we see at Aither Group are balanced and flexible. It's about building a portfolio.
Diversification, essentially.
Exactly. Diversifying across those purchase types. Maybe you use spot for, say, 20% of your needs for immediate flexibility and lock in 80% through longer-term forwards or offtakes for security and better pricing.
And diversifying beyond just the purchase type.
Yes. Also diversifying by removal method, having a mix of nature-based and engineered solutions, depending on your priorities for cost, permanence, co-benefits. Diversifying by region, by supplier, by contract terms. It's all about managing risk, delivery risk, price risk, reputational risk.
You could even tailor it to your own business, presumably.
For sure. A company in the forestry sector might naturally lean towards supporting high-quality agroforestry or reforestation projects. A tech company might strategically favor engineered removals like to signal innovation and align with their brand.
And getting the contracts right sounds critical too.
Absolutely crucial. The smartest buyers are putting real thought into this, tying payments to clear project milestones, including strong delivery guarantees, being really explicit about the standards for measurement, reporting, and verification MRV.
And moving quickly.
And moving quickly. The market for the best projects is competitive. Just as an example, something like 62% of the expected high-quality biochar supply for 2025 delivery was already sold by early this year. And about 28% of the total supply through 2026 is already tied up in offtake deals, so you can't afford to sit on the sidelines for too long.
Wow. Okay, it's clear this landscape is complex, it's moving fast, but also full of opportunity.
Definitely. And, navigating that complexity, seizing those opportunities, that's exactly where Aither Group comes in.
Right. As Aither Group, we provide those critical insights and services to help you engage confidently and effectively in this vital sector.
Our team uses deep market analysis to help you understand the regulations, navigate the pricing complexities, and importantly, identify those high-integrity projects that genuinely align with your climate commitments.
So, under our trading solutions, for instance, we help clients unlock value from various environmental commodities, obviously including carbon removal credits. We connect you with the best trading options tailored to your specific needs in this evolving market.
And through our sustainability services, we provide strategic analysis. We help you understand the natural systems involved, assist with your CSR actions, your reporting strategy, your due diligence.
Yeah.
Basically ensuring your carbon removal strategy fits seamlessly into your wider sustainability picture.
And finally, our project's development expertise gives you access to a wide selection of internationally verified carbon credits and plastic credits too, from projects across the globe, both developed and emerging markets. This lets you invest directly in the solutions shaping this new frontier. So wrapping up, what does this all mean for you listening? I think the key takeaway is that this surge in carbon removals isn't just some passing trend. It's really a fundamental shift in how we have to tackle climate change.
Absolutely. Whether it's harnessing nature's power or deploying cutting-edge tech, getting strategically involved now is critical for securing supply down the line, for managing costs, and for demonstrating genuine climate leadership.
So maybe the final thought to leave you with is this. What's one concrete, tangible step your organization could take, maybe even this week, to start engaging more deeply with carbon removal, knowing just how pivotal it's going to be in the net zero economy of tomorrow?
Yeah. Whether that's just exploring the different buying options or maybe reassessing how your current portfolio stacks up against future needs, the time to think about it and act is definitely now.
Thank you for joining us on this Aither Insights into Carbon Removals.
Stay tuned for insights that matters.